Hey guys, this is a Forex price action trading course. This is lesson number 14, using gaps to measure the market bias. Okay, let's get going. Okay, here's a lesson overview. First, I'll be going over the basic rules that you need to know in order to gauge the market bias with gaps, and then I'll provide a demonstration of measuring the market bias with gaps. Okay. Alright, so here's the basic rules. Number 1, the entire width of the gap becomes support and resistance. Alright, so right here on this weekly chart, there's two gaps here. There's one up here, and there's another one right down here. Now, if you recall, the entire gap becomes support and resistance. So for example, if price came up here into the middle of this gap, then this gap provides resistance. However, if price closes above this gap no longer provides resistance. Moreover, if price came down into the middle of this gap down here, this gap still provides support. But if price comes down and closes under this gap, then this gap does not provide support at that point. Okay, so the entire width of these gaps provides support and resistance. Alright. Okay, number 2. The bigger the width of the gap, the stronger the gap. Okay, so again on this weekly chart, this gap up here is slightly wider than this gap down here. Thus, this bigger gap, say, provides an opposing strength of +5 future short strength, while this smaller gap only creates a future long strength of +3. And simply because the bigger the gap, the stronger the gap. Alright, let's go on number 3. Okay, number 3. The higher time frame gaps are stronger. Alright, so on this weekly chart, the width of this gap right here, let's try comparing it to a 4-hour chart's gap. Okay, so on this 4-hour chart, this gap down here is roughly the same width as that weekly chart's gap. But this gap, although it is roughly the same size as the weekly chart's gap, only provides a +2 future long strength. Okay, let's go back to the weekly chart again. Okay, however, this weekly chart's gap, which is roughly the same width as the 4-hour chart's gap, actually creates a +6 future long strength, simply due to the fact that this gap is on a higher time frame. So the higher the time frame's gap, the stronger the gap. Alright, let's go on to number 4. Alright, number 4. When gauging the lower time frame's pivot with the higher time frame gap, if the measured pivot closed past the higher time frame's gap width, that gap no longer creates opposing future strength. Okay, so let me explain this. Alright, so on this weekly chart, there were two gap areas. So one is up here and one is down here. And these weekly gap levels are reflected on the 4-hour chart. So let's go over there. Alright, so on this 4-hour chart, those weekly gap levels are right here and right here. Now, as a general rule, if the lower time frame's price closes above a higher time frame's gap level, that higher time frame's gap can no longer be used to create opposing strength. So in this case right here, since the 4-hour chart closed above that weekly gap's level, if we were going to measure the future short strength of this 4-hour pivot, we cannot use that weekly gap as a price characteristic that provides future short strength. However, in this case to the right, since 4-hour price never closed above that weekly gap's width, each one of these pivots have an added future short strength from that weekly gap. And again, it's because price never closed above that weekly gap width. So in other words, if 4-hour price happens to go up and close above this weekly gap level, if we were measuring the future short strength of this new pivot, we cannot use this weekly gap to provide future short strength at this point. Alright, let's go on to number 5. Alright, number 5. The higher time frame gaps can change from resistance to support, depending on the lower time frame's pivot you are measuring. Alright. Okay, so on this 4-hour chart, as price came up, we were looking to use this weekly gap level as possible resistance. However, 4-hour price closed above this weekly gap level. Thus, we can no longer use this weekly gap to create future short strength for this pivot. So in this area on the 4-hour chart, we were using this weekly gap as possible resistance. However, as price came back up and came back down on this pullback, if we wanted to measure the future long strength of this pivot right here, since price is within that weekly gap level at this point, this weekly gap level now provides support. So in other words, if we were measuring the future long strength of this pivot, now provides support and thus adds future long strength. Okay, so the higher time frames gaps can change from providing resistance then to support. Okay, one last example. If price on this 4-hour chart came up, this weekly gap level is used for resistance. However, if price gets through here and pulls back and ranges here, and if we wanted to measure the future long strength of this 4-hour pivot here, we could now use this weekly gap level as support, and thus it provides future long strength. Okay, so those are the basics. Let's go on to the demonstration. Okay, next slide. All right, demonstration. Number 1, find all the gaps near current price. So find the gaps near current price on all time frames you use to trade, following the process explained in lesson 10. Okay? All right, so for this demonstration, we'll be using the monthly chart, the weekly chart, and the daily chart. And all the gaps for each time frame that are close to current price have already been charted out. Okay, but just remember, if you're using the 4-hour chart also to trade, then you also want to chart out the 4-hour chart's gaps also. Again, we want to find all the gaps on each time frame that we use to trade. And for this demonstration, that will be the monthly, weekly, and daily charts. All right, let's go on to number 2. Okay, number 2, choose a pivot to measure. All right, if measuring a higher time frame's gap, there's no need to consider the lower time frame's gaps. Remember, the higher time frame's gaps being innately stronger than the lower time frame's gaps rule. Okay. All right, so for this demonstration, we're going to measure the future short strength just using gaps of this weekly pivot right here. Now, since we're measuring a weekly pivot, we do not need to consider the lower time frame's gap levels. However, we also have to consider the monthly chart's gaps. So in other words, if we were going to use gaps to measure the future short strength of this daily pivot right here, then we have to take into consideration the weekly and the monthly chart's gaps to measure the future short strength of this daily pivot here. However, we do not have to find the gaps on any time frame under this daily chart. Okay, number 3. Start measuring from the highest time frame gaps. Make sure there is no close outside the higher time frame's gap levels on the lower time frame's pivot you are measuring the future strength of. Okay, so again, we'll be measuring the future short strength of this weekly pivot right here. Now, the first thing we want to do is to check if there are any higher time frame gaps at this pivot level. So let's go over to the monthly chart. Okay, so on this monthly chart, that weekly pivot is generally in this area right here. And you can see that there were monthly gaps at that level. So let's take note of the price levels of this monthly gap and reflect it onto the weekly chart. So the top level is at 1.2243 and the bottom end is at 1.2219. Okay, so on this weekly chart, let's go ahead and adjust these gap levels to reflect those of the monthly chart's gap. Okay, so the top level was at 43, roughly in this area. Okay, and the bottom level was at 19, so let's bring it up a little. Okay, so this gap level right here is a reflection of the monthly chart's gap. Okay, so in order to measure the future short strength just with gaps of this weekly pivot right here, we reflected the higher time frames gaps onto this weekly chart. Okay, and since that monthly chart's gap is stronger than a weekly chart's gap, we'll give the future short strength of this weekly pivot to be, let's say, +6 future short strength. Now we gave it a rather high number simply because the monthly chart's gaps are stronger than any of the lower time frames gaps. Okay, so let's go on to measuring the market bias. So let's say, hypothetically, if we were only using gaps to measure the market bias. Now if price comes down from this point, then ranges at this level right here, and we wanted to measure the future long strength of this weekly pivot right here, we're going to repeat the same process. So we want to go over to the monthly chart to see if there are any gaps at this weekly pivot here. So let's go do that. Now, as you can see on this monthly chart, there are no monthly gaps in that weekly pivots level we were talking about. So in this case, we're simply going to use a weekly gap because it's the next strongest time frame. So let's go back to the weekly chart. Okay. So since we found there were no monthly gaps at this weekly pivot level, however, there is a weekly gap at this level. Now, seeing that this weekly gap is smaller than this monthly gap at this level right here, and furthermore, since this smaller gap is made on the weekly time frame, which is innately weaker than the monthly time frame's gap, we're only going to give a future long strength to this weekly pivot of +2. So at this point, if we're only using gaps to measure the market bias, there's a +6 short strength from this pivot right here, while there's only a +2 future long strength for this pivot right here. So since the short strength is much stronger than the long strength, our market bias within this pivot high right here, where we measure the future short strength, down to this pivot right here, where we measure the future long strength, our bias should be down, at least down to this pivot right here, because that's where we measure the future long strength of. So theoretically, on the lower time frames, we should be looking for short trade opportunities, at least until the pivot low in which the long strength was calculated. Okay, so this is the basic way in which we use gaps to measure the market bias. In other words, to know which direction and to generally what point we should be taking long or short trades. Okay, next slide. Okay, so that was it for that lesson. In the next lesson, we're going to do a demonstration of basic price action analysis. So we're going to put together all that we learned up until now from the previous lessons and do a demonstration of basic price action analysis using those price characteristics. Okay, like always, if you have any questions about this lesson, please leave it in the comments. And I hope you guys have a great rest of the day. And thanks for watching. Okay, bye.